with Credit Suite, and today I'm going to be talking to you about the rise of FICO SBSS, what it means for funding, and some interesting things that we're starting to see FICO starting to do across the world, or across the business credit and business financing scene. So it's a very important, very timely topic to talk about. I'm going to help you understand what FICO SBS is, how it's going to affect your business, how it's going to affect your ability to get funding and business credit in the future. So look forward to hanging out with you. And if you have any questions, type them in the chat. Me and my team are watching. We're here to answer all your questions for you. If you need anything or have any questions, let me know. I'll jump in and help answer them for you. And just tell me where you're from, what type of business you have. I'd love to hear from you, and appreciate you being on with me today. So let's start with understanding what is FICO SBSS. So FICO SBSS, the best way to explain it is really in the name of what it is. FICO SBSS is Small Business Scoring Service. So FICO's Small Business Scoring Service is what it is. And the simple way of explaining it, it's your business credit score. We all know about personal credit scores, how there's a personal FICO score. FICO SBSS is the same thing for your business. It's just calculated much differently. But you're going to see here in a minute why this is going to be so critical for you to understand, and how it can potentially impact your business growth and your business funding in the future. So with your FICO SBSS score, it's going to be different than your normal business credit scores. The reason is because the FICO SBSS score is going to range it from a score of 0 to 300. Now, if Luciana here on Facebook says she tracks hers through NAV, NAV is a great place to watch your business credit scores. Your business credit scores are scored on a scale from 0 to 100. The FICO SBSS score is actually scored from 0 to 300. So the FICO Small Business Credit Scoring it gives you a score from 0 to 300. Now, with that, a good score is considered 140 or above. So just a little bit below the halfway point, but 140 or above is considered a good score. Anything below a 120 is considered weak or considered a bad score. So your goal here is always try to get up to that 300 mark, but it's just like your personal credit, getting to an 850 is a kind of a unicorn. It may happen, it sometimes happens, but it's not very often. But with the FICO SBSS, it's going to be a lot harder because there's a lot more factors to go into it, and a lot of factors that sometimes you, as maybe the primary business owner, can't control. So how is the FICO SBSS score calculated? This is where things get a little bit different. So with FICO, you've got a very clear algorithm of how it works, where you've got length of credit, you've got your payment history, you've got your account utilization, all these different factors go into it. With the FICO SBSS score, it's going to perform differently than your personal credit. One, because this is the goal of the FICO SBSS score is to show banks and lenders how worthy your business is of getting funding. Now, a business operates completely different than an individual. So as an individual, the majority of Americans that have credit are on a fixed income or a salary. They're not getting these big swings of revenue coming in. The likelihood of most people, most employees, or W-2 workers having just this big influx of cash isn't real high. So it's based more on the utilization. Now with FICO SBSS, what you're looking at is what they're using to calculate it is, one, they're looking at the consumer credit reports for the principals or the guarantors of the business, up to 5 owners. So right there, you can see if you have partners in the business, if you have people who have ownership in the business, it's not just dependent on your personal credit score. It's dependent on all 5 of your business scores. Then it's going to look at the business credit reports of the business. So if you have a business credit score, if you've been building business credit and you've got that business credit score that you can monitor through NAV or some of these other places, at that point, that's the one that's going to range from 0 to 100. But that's also going to be that's going to have an impact on your FICO SBSS score. Now, where this gets more complex, and this is something that's very intangible, that's hard for you as a consumer of the score to actually understand, is it's going to look at the application data supplied on the loan application. So when you're applying for a loan, it's going to ask you like how much revenue do you have, how long have you been in business, what are your monthly expenses. Like if you've ever applied for a loan, you know what this is. This is very common. These are very common questions with any type of loan that you get. But that data that you supply is actually used to help calculate your FICO SBSS score. And then the last thing they're going to look at is they're going to verify the information with the business financial data. Now, some of this data is going to be coming through LexisNexis. Some of this is going to be coming through your business credit report. Some of this is going to be what you're providing. And a lot of it's actually going to come from when you submit that information to the lender. So for example, if you're looking at an SBA loan, you want to qualify for an SBA loan. Let's say you want to have massive growth and expansion, so you're looking at a SBA 7A loan. You're going to have to submit 2 to 3 years worth of tax returns, your financial statements, your profit and loss, your operating expenses. You're going to have all these different financial statements that your CPA is going to need to prepare in order to qualify for that loan. That information is then given to FICO to calculate your SBSS score. Now, it's not as nefarious as all of your information is going to FICO and they're holding all your data. It's nothing like that. So let me explain why FICO SBSS is on the rise, what they're doing, and it's going to help you understand how this process is actually going to work in your favor or against you either way. So lately, when you start studying business credit and you start watching what's going on with different lenders, different credit providers, FICO has really started making this big push for implementing FICO SBSS into the everyday loan process. And before, it was really just held for traditional lenders. But now they're starting to push for alternative lenders as well, meaning that a lot of the fintech companies that you're looking at, like Bluevine or man, my brain just went blank. But these fintech lenders are now starting to implement the FICO SBSS scores inside of their lending. You're also going to start to see this with credit issuers, business credit. So even if it's a trade account, even if it's a net 30 account, that FICO SBSS score is still going to have an impact on that. They're making this push for one reason and one reason only. It's FICO. They own the scoring algorithm for the consumers, and now they're making a push to own the scoring algorithm for businesses as well, which in the grand scheme of all things considered is not a bad thing because FICO's pretty good at this. They've been doing it for ever now. I mean, they've been around since the early 1900s. This is just, it is what it is. But it's going to change. It's going to change how we're interacting with banks on the business side. Now, I'm going to give you a personal opinion here, and you can take it for what it's worth, but I don't necessarily see this as a bad thing. I think what we're going to see is that with the rise of business lending, like if you're watching keywords, if you're watching analytics, if you watch the growth of a lot of these fintech companies, a lot of these lenders, business funding is becoming a much more common place, where before business ownership and people who were able to get business loans was a much smaller demographic. Now it's starting to become more prevalent. It's starting to be out in the forefront. There's a lot more push on it and a lot more financing. It's a multi-billion-dollar industry that's starting to that just keeps getting more and more traction over time. So it's not necessarily a bad thing. But this is how FICO makes money. And so now they're seeing the opportunity of pushing this. So the reason that we called this the rise of the FICO SBSS score where is because before it was kind of this hidden thing that SBA lenders knew about, that commercial bankers knew about, but now it's starting to become much more in the forefront of our minds of understanding what's happening and what's being used. Now, the reason that you don't have a lot to be concerned about. So if you understand the FICO business model, FICO isn't collecting data from banks and then calculating scores. The way FICO operates, and this is on the consumer side and on the business side, is they actually get into the software that you're using to make calculations. So, for example, Let's say you're Bank of America and you want to have the risk management, the credit score risk management system inside of your underwriting decision. FICO comes in, you contract, you pay FICO thousands of dollars. They come in, they install that algorithm onto your software. And so they have developers, they have teams of people that will go in, they'll put that into the software, and then your score is calculated based out of the information that's provided inside of Bank of America software. So FICO's not actually seeing your personal data. They still have the score information, but they don't actually have your personal data or the business data that's going on with it. And that's the push that FICO is making right now. They've actually before FICO SBSS was just a very set formula. It wasn't, you wouldn't even consider it an algorithm. It was just a formula of if A plus B equals C, then give them a loan. If it equals D, don't give them a loan. It was really that straightforward. Now with this push, what FICO is starting to do is they're doing what they've always done traditionally on the consumer side. On the consumer side, if you're applying for a mortgage, there's going to be certain accounts that are going to hold way more weight on your FICO score when you're applying for a mortgage than if you're applying for a credit card. So, for example, we're going to stick with Bank of America just because I like picking on them. If you go to Bank of America and you get you get a mortgage, it's going to look at your installment history. It's going to look at your rental history or your previous home ownership and put more emphasis on that in the mortgage process. Now, if you go and apply for a credit card with them, it's going to look at your credit card data. I mean, it's kind of common sense thinking, but a lot of times when you take a step back and look at it, it helps you to understand why when you go to a bank, they're going to have different scores for you. Or if you go to different lenders, there's different credit scores, personal and business. And that's because what's happening is FICO is weighting different aspects of their algorithm to make it fit the risk model of the lenders that are utilizing the FICO scoring model. So that's really the whole push of it. Now, if you want to let's get into how FICO is positioning this. So the benefits of FICO SBSS from the lender's perspective is FICO SBSS scores allow the lenders to make more informed decision about the businesses to lend to and which to avoid. Now, the simple explanation of this is it streamlines the process, where just like if you go and apply for a loan and they see that you have a 400 credit score, they're probably going to turn you down. With FICO SBSS, it's going to essentially be the same thing. If you're below that 120 mark, they're just going to automatically turn you down, and you're going to get an automated denial based off the data that you provided to them. It's very beneficial for small business owners who do not have a lot of business credit because it takes the blend of the finances and it shows different stability in different places. So it's a little bit of a different model, but it's still the same benefit for the banks. It's all about speed and efficiency and helping them move through. The other thing is that they're boasting about accuracy. So the FICO algorithm has been developed over decades. This isn't new. This isn't something that they just woke up one day and they're like, hey, let's create an algorithm. This is the same algorithm they've been using that we've got, I don't even know how many different variations of now. Like I've seen 10, 11, FICO 11, FICO, it's all over the place. But this algorithm is just now, they're starting to make a push for it to be in the commercial side to kind of unify and bring everything under one credit score that makes sense. So we had Luciana before had mentioned that she tracks her business credit through NAV. Now that's always good. I'm always going to recommend that you monitor your business credit. But what you're going to find is that as you're going through this, the credit scores that they're going to be looking at. I lost my train of thought. I was watching your guys' comments in here. So it's higher. It's assessing for the credit worthiness. So they're trying to unify the scoring model. So if you go and you look at your NAV credit report, it's gonna rank it between 0 and 100. If you look at Equifax, it's gonna rank it from 0 to 300. Experian has a different model altogether. And so what's happening is right now there's no uniform in business credit monitoring. There's no uniformity in the business credit scores. So nobody really ever knows what their business credit score is, because if you're monitoring it through all these different places, it's going to be different. With one unifying factor, with one algorithm that's used by all the banks, it provides a sense of uniformity. It makes it where everybody can speak the same language of saying, hey, I've got a FICO SBSS score of 220. I'm in good shape. You can know that now, and you can make a more informed decision, and it helps banks to kind of compare themselves with other banks that are out there and make sure that they're getting the most good loans that they can and avoiding the most bad loans that they can at the same time. The other thing that FICO is touting is that it's unbiased, and this is yet to be determined because it's the not the popularity of it, but the commercialization of it, big word for the day, the commercialization of it is just starting to become public. So we're just now starting to understand the algorithm. We're starting to understand the formulas that are being used. So there may be things that we find out that are completely unbiased, but that's what they're saying, because at the end of the day, they're not looking at ethnicity. They're not asking gender questions, anything like that. They're not looking even at addresses of where the owners live. They're simply looking at the credit scores. They're looking at mostly at the financial data of the company. So it's making a much more informed mathematical decision that's not biased on anything else. It's not biased on reputation. It has nothing to do with what your online persona looks like, nothing like that. It's simply just going through, checking off numbers and telling you mathematically where you rank on a scale of 0 to 300. So it's unbiased. Now, some of the drawbacks that we have seen already with FICO SBSS, despite its benefits, there are still drawbacks. There are still banks that are complaining about it. There are lenders that have issues. Now, the first one that has really prompted this move with FICO is the lack of customization. So before, like I said, they would go through and it was just a formula. They would plug it in, and if the score came up, great, you're good. If it didn't, not sorry, you fail. But the banks were never allowed to customize it. They had no flexibility in making the scoring model fit for their business loan types or for their credit types that they're offering. So that lack of customization was a big downfall for a lot of banks, because they may look at it and go, look, if a customer has a banking relationship with us, if we have all of their banking relationship and we're basically hands-on with their cash flow, we're going to give that a higher score because it's less risk to us. So that's part of the reason the FICO SBSS have been making that push, because they know this is a downfall. The other side is that there's incomplete information. And this is no surprise to anybody who's been involved in business credit. If you guys have been building your business credit, or even if you have credit lines that aren't reporting, you know that 97% of the business credit lines that are out there don't report on a business credit report. And so part of the problem with the FICO SBSS model is that it's not taking into account all these different accounts that you may have, all these relationships with vendors or trade relationships that you have, or payments that the business is making. It's not commonly reported like it is on the personal credit. But I think that's the other side of what FICO is starting to push for, is getting this getting more traction with it, getting it where it's more common, getting it where it becomes the industry standard for what everyone's looking at. So the incomplete information has been a big downfall for FICO SBSS. I have no idea how they're going to fix that. That's that's something that their big brains are going to have to figure out. And the last thing that lenders have complained about is limited flexibility. Businesses with low credit scores may have limited loan options, and so it really puts businesses who need revenue, who need money, into a bad situation, where now there's loans out there for business owners who have bad personal credit. Now, if you have bad business, a FICO SBSS score, and you have bad personal credit, which the two kind of go hand in hand, it can have even more of a detrimental effect on you as a business owner getting the funding that you need. So those are kind of the three pitfalls that we've seen and the drawbacks that we've seen with FICO SBSS. So what does this look like in the future? What this looks like in the future is that you're going to start to see businesses are going to make lenders and credit issuers are going to start to make more of a push for FICO SBSS scores. It's going to become, as FICO's getting more sophisticated in the business systems and implementing it into the business decisioning software, business loan decisioning software, you're going to start to see that it becomes a more contemporary model. that it becomes more streamlined, that it's going to be basically what we've seen with personal credit, where you're going to have your score requirements, you're going to have that. Now, the thing about it is that it's going to take a couple of years to get there. It's not going to be, you're not going to wake up tomorrow and all of a sudden all these banks are going to have all these requirements. It's something that's going to develop over time. Like initially what happens is it starts as an internal process. It starts as internal memos that people are talking about, that if you talk with a loan officer, they may let it slip. They may talk about it. An underwriter may talk about it. But then pretty soon, lenders will start to figure out, hey, we've got a competitive advantage. We got a unique value proposition over here based on our FICO SBSS model. Now let's capitalize on that marketing. And so that's when it starts to become more in the forefront. But for now, it's going to be a lot of the back end. You're probably not going to hear lenders really talking about it, even though there is this big push for it. It's still something that's going to take time to really implement and to get you forward, to move you forward in a better fashion. So let's talk about, so knowing this, how do you prepare for FICO SBSS? I'll tell you a little secret, and if you've been following our channel, good for you. This is going to tie in a lot of stuff. If you haven't followed our channel, this is your reminder to get out there, hit that like button, hit that subscribe button. Make sure to follow us. We've always got great information to help you prepare for the unexpected, to get credit, to get you need them. But let's talk about optimizing. How are you going to optimize this? Now, you've heard us talk about fundability and your fundability foundation. First step to get into underwriting, because with the fundability foundation, what you're positioning your business in a way that you're not being hit by fraud. Now, with knowing that FICO SBS is going to be leaning on the factors of your personal credit, that's something you can control by fixing your personal credit. Your business credit, we show you how to build your business credit so you can have great scores for a FICO SBSS. Application data supplied on the loan application actually all comes from your fundability factors. So as you hear me and Ty talking about fundability on these videos, or you see Ty on YouTube talking about the different fundability factors, the reason we're talking about that is because this directly impacts your ability to get loans. And some of these factors are going to include how you're running your business finances. Now, like a lot of you small businesses or startups, or those of you guys who are, you may be making, $12,000, $15,000 annually, but it's just kind of a side hustle. As you start to progress, as you start to hit that $1 million mark with the business, as you start to get to the point where it's full time, this is your lifeline, this is everything that you're doing, you're gonna have to get more sophisticated to really be prepared to get loans, especially as FICO SBSS becomes on the rise. Having your financials in order, making sure that your books are always there, being on top of your accounts payable, your accounts receivable, knowing what your cash flow is. This stuff becomes critical with your credit scores now with the rise of FICO SBSS. And then having all that data in one place, having it where you can review it, you can watch it. One, it's got multiple benefits. One, it's going to help you improve your business credit scores, which is great. But before that, the most important thing is the more that you're watching your financial data, the more profit that you can make. The more profit you make, the more you take home, the more you can hire, the more you can grow, you can expand. So having your business finances in order, having those financial statements in order, learning how to review them, learning how to watch them, learning how to make informed decisions on where to cut costs, when to hire, how to use marketing techniques to be able to grow and expand the business strategically and at a steady pace is going to become more critical than ever, because it's going to start to impact the small businesses, where before this was something that you would only have to deal with traditional lenders. This is going to become more and more in the forefront as we're moving forward with the business credit and the business financing worlds starting to evolve to adapt to the FICO SBSS model. So I've said an awful lot, talked really, got really in deep on this. But the thing to know is that everything that we're teaching you, business credit, building your business credit, having a good, strong business credit profile, having your personal credit in order, and following the 5 fundability factors, making sure that your finances are in order, making sure that your books are in order, knowing how to apply for a loan at the right time with the right information, all becomes way more critical for getting funding, no matter where you're at in your journey. So that's what we're here for. That's what we do to help, and we're always happy to help. If you ever need assistance, feel free to give us a call. This is our QR code. You can go right here. You can take a screenshot. You can select that, and it'll take you right to scheduling a financial assessment with us. Because here's the thing, guys. At the end of the day, if you apply for a loan right now because you need it, you probably applied too late. You need to make sure that you have financing secure. You need to make sure your business is secure before you apply for a business loan. They want to see strong businesses get strong lending. They get strong funding. The more you're in order, the more you're prepared to get the lending that you need, to get the funding that you need, the more prepared you're ready for anything. So if recession hits, or if something happens and our supply lines go down, or inflation just keeps creeping up, or interest rates go up again, all this stuff has an impact on your business. Having your business in order, having your fundability in place, having your business credit, having all this in order makes you fundable, put you in a place where you can get the loans that you need when you need them. So if you need help, if you want to talk with us, we'd love to sit down, look at your business credit scores with you, help you figure out what you can be doing right now, even what you can qualify for right now, and how you can stair step that into the next direction. And you can also, if you don't like doing that and you just want to give us a call, feel free to reach out. Our phone number is 877-600-2487, 87, again, 877-600-2487. We would love to talk with you, help you out, make sure that you have all the resources and tools that you need to grow your business. This is a little bit of a different topic than we normally talk about. I hope you guys enjoyed it. It was a lot of fun getting to share this knowledge with you, and to be able to share some of the forecasting of what we're seeing in the industry. So if you like this, make sure you share the video. We'd love the support. Help out your other entrepreneur friends. Let them see what's happening in the business credit world, and make sure you like and subscribe to our channel, and we will see you next time. Thanks. Have a great day.